We're looking for people who have distressed properties, like physical distress. They need a lot of repairs. They don't have the money to do that kind of stuff. It's kind of like a last minute thing. They need to move quick. So there's some type of stressor in there in that transaction that we can come in and help them with.
Hello and welcome to another episode of the Ideal Investor Show, and we have a special guest who is specializing in real estate investing and especially starting out with wholesaling and other things in real estate relation. And so he is a fellow coach and mentor. His name is Rafael Cortez. Rafael, welcome to the show.
Thank you so much, Axel. I appreciate you having me over.
Yeah, awesome. Thank you for making the time. Before we get into the details of what you do and how you serve your clients, tell us a little bit where you're from, how you got to where you are, and what your history is.
So I started in real estate in around 2009. That's when I got into it. And I mean, to me, it was really, I just kind of fell into it because I was looking for something else to do while I had my other business. I launched my first business when I was 21 years old, and I built that out. So I got to a point where I had some cash in the bank and I wanted to invest in something, and I started flipping. So I looked at real estate as an initial, strategy for real estate investments. But I didn't know what I was doing. I didn't know what I didn't know. So the only thing that kind of came to mind was, I worked construction when I was going through high school and fire academies and to pay for all that stuff, right? I would go and work construction in the summertime and build up some cash base and come back and do that sort of thing. So I was like, all right, cool. I know how to swing a hammer. I went out there and I bought this property from a wholesaler. And I flipped the property. I broke even after 6 months of sweat, blood, and tears. So it wasn't a complete loss, but I learned a lot through the process. And that was like my first experience back in 2009. We were just kind of rebounding from that 2008, debacle. And it was just an interesting time. You could buy properties for a very low. Well, actually, they were in the process of coming back up. So I got into buying at the right time. Even then, I spent way too much on contractors. I spent way too much on materials, doing the work myself and a lot of the stuff. I mean, there were so many things that I did wrong just because, again, I didn't know what I didn't know back then. So that was my first experience. And I did a couple of those. And then I started wholesaling after that. Eventually, I sold my other business, which was a transportation business, and I went full head on into real estate.
Yeah, and so when I did a little research in preparation of our show today, I saw that you also, or maybe more than just on the side, do coaching and mentoring. Can you describe a little bit between kind of like actively wholesaling, if you're still doing that, or what the part about the coaching and mentoring is that you're offering?
So, I go back to that period of bootstrapping when I was getting started. And again, there was a lot of confusion. There was a lot of, pieces that were moving, right? I tend to be very methodical in the way that I build businesses. So I built this process. I started putting together this process for my own business with CRM strategies, KPIs, and standard operating procedures. I come from a fire department background. I used to be a firefighter. And that whole structure, if anything, right? Like working there taught me structure, taught me responsibility and compliance and that sort of thing. So I kind of brought that mentality over into the wholesaling space and started building my company based on a lot of those principles. But I put together a 6-stage process for my wholesaling business. And that's what my coaching and mentoring is all about. And I do group coaching. So, we jump on a call every single week and we start, just breaking down deals, comping, what part of the process you're in, lead generation, which is, one of the hardest things for people often. And then, of course, negotiation, strategy, dispo, the whole 9 yards when it comes to the ins and outs of wholesaling specifically, right?
Yeah, absolutely. And that's very good. And I think helpful because my philosophy, and I think you and I are very similar in that sense, is for credibility, I would say it's important that if you try to help somebody through coaching and mentoring on whatever topic it might be, that you have honestly really had the experience yourself, right? That you actually did the things that you want to help other people with. And ideally, yes. And I would say this for myself, over time, the more you practice, the more you study, the better you get in that subject matter, whether it's in your case, wholesaling, or in my case, residential real estate, investing directly, like purchase properties and have them managed and stuff. That's, I think, a really important part, like you said, that somebody like you or me has actually done it and can actually, point out the things that work and that don't work. Now, I have always personally, and maybe I'm thinking wrong about this, seen wholesaling in a sense like being kind of like the bridge or the connector between those who want to sell a property and those who are interested to buy a property. Can you go a little deeper and describe a little bit what the role of a wholesaler actually is and how that works, and maybe even how people can get into it?
Yeah, of course. So wholesaling, it's really the you specialize in finding motivated sellers. We're looking for a very small amount of properties out there. Not everybody's going to be a client of ours, but I mean, let's say that 100 people want to sell. Maybe 3 or 5 of those are going to sell to us. We're looking for people who have distressed properties, like physical distress. They need a lot of repairs. They don't have the money to do that kind of stuff. A lot of people, get relocated fairly, and they, it's kind of like a last minute thing. They need to, move quick, divorce, probate. So there's some type of stressor in there in that transaction that we can come in and help them with. All right. Otherwise, people are just going to go to the MLS and then sell retail, right? Like that's the best way. We even tell them that if we feel like the property is a better fit to be sold retail wise, or the scenario is, like we'll suggest that. But the clients that we actually end up doing business with, they have an issue. They're having a big problem that retail is just not going to cut it. So we're looking for those, right? So we have, we call them motivated sellers. And basically what we do is we come in, say that a property needs $15,000, $20,000, $30,000 in to rehab it. We'll come in and then we'll get that property under contract, but we have to get it under contract at a substantially lower price than what it's worth after it's repaired, right? We have vested interest in that contract. And what we do is we have a list of buyers. We build a list of buyers and we sell our vested interest. So we sell that contract over to one of those buyers for $10,000, $15,000. The average is around $15,000 nationwide. Our average per deal, I think right now we're around $32,000 per deal. So every time we assign a deal, that's usually the amount that we'll end up getting. And it fluctuates. I mean, sometimes you do a lot more, sometimes you do less, right? But I mean, it's really simple. You become the middleman. There's no fiduciary duty. There's no representation. So you don't have to have a real estate license in most states. Some states are requiring that kind of stuff. I actually just recorded a video on that yesterday. But as far as the legalities of it, some states do have disclosures and things that you have to look into and incorporate into your business. But most states, all you're doing, I mean, it's like selling a bicycle. Like if I have somebody wants to sell me a bicycle and I come in and I sell, my interest in that bicycle to somebody else, I can make a profit, right? It's the same thing in real estate wholesaling.
Yeah, absolutely. So if you don't mind, let's just, for the sake of the audience, to make this a little more real from the numbers perspective, let's say there is somebody in the Phoenix area where you are, or maybe more between Phoenix and Scottsdale or somewhere in those desirable areas. I always call these kind of properties to some extent the ugly duckling in a nice neighborhood. I don't know if that resonates.
The uglier,
let's say
the uglier,
like something,
the better.
What I want to get at, let's say, and you might say these numbers are completely unrealistic, but for my audience, we're always trying to see that a property has an opportunity for cash flow from an investment perspective and not so much to move into ourselves. So if there were a property where you would say, if this were to go with one of the big like Remax or Coldwell Banker or stuff like that, and it were all ready to go, it would be like a $350,000 property. And you know that it, like I think you said, like it needs $30,000, $40,000, $50,000 of repair. So can you take that kind of like as a starting point? What would you have to get it for, and how does it work? And especially, I think people would be interested. You said basically assigning the contract. So I can imagine our audience would like to know, okay, so let's just pretend I'm the one who has this house that I know I need to put 30, 40, 50,000 in. I just don't have that kind of money, but I need to move to Boston or what have you. How would that go? How would that play?
So just to, kind of like for the sake of numbers, realistic picture, right? Say that you have a property. I think right now our average price point is around $430,000 in the valley, right? But let's keep it at $400,000. So say that we have a property is worth $400,000. It needs maybe $40,000 or $50,000 in repair. So that, and $400,000 is all, decked out. It's 2022 standards and ready for the market, right? So we have to account for the rehab pricing, but we have to go under that because there's always fees, right? So you're always going to have sales fees, buyer's fees, holding costs, and closing fees and all that stuff. So usually we knock out, like the math is relatively simple when we're presenting offers. We'll look for a ARV, after repair value, like what's the market value of the property. What we're doing right now is we're multiplying that number times 70% minus 15,000 for our fee on average, minus repairs.
So that would be basically 70% of 400 would be minus 28,000. So that would give us, okay,
70.
so you would have to get to about 300 or something like that, right?
Yeah, we would be looking at the low threes for something like that, right? And here's the thing, like people often ask, like, why would somebody sell me their property, for that amount? One is the comps are always scattered. You're gonna like if we look at a property that's ARV $400,000, you're gonna have comps between the 370 and the 420, 430 range. So there's
Right,
always a
right.
range.
Yeah, yeah.
We pick a relatively middle ground type number and then work our numbers based off of that. So right out of the gate, I mean, you are going to have some cushion, some buffer there for the offer. But then it comes down to the conversation, right? It's really not about convincing people to sell us their property. If we have to convince, we're in the wrong place. We have to figure out what the real need is. For example, one of the most common reasons for selling is people just start getting older, right? They need to downsize or they need to go to a nursing home. They have a ton of things in the property. We have hoarder houses that are in play like that. We have a lot of properties that are just in heavy physical distress, and people don't have the money to fix it and then sell it retail. So what do? They cash out on the equity that they have. We come in, do the work, we make a profit, because we put a lot of money into marketing and time and effort. So we make a profit off of that, but then we have to leave enough room in there for the investor. That's where that 70% comes from. So when we multiply times 70% minus repairs minus our fee, it's kind of like a rule of thumb number. Of course, you go deeper into the analysis, and you're gonna tweak it a little bit. But
Right,
that
but
said,
I mean the thing about it is that that's kind of the question when you go into that calculation. For obviously you need to get compensated for the effort
yeah,
and then the repairs. Who is actually going to do the repair?
whoever your cash buyer is. So whoever buys that contract from us. All right. So we have the
So
seller on the
when they buy the contract for the house, that basically means you negotiated everything. Let's just say you
yeah.
negotiated with the seller to give it for like 350 for sake of
Yeah.
argument.
Yeah. So yeah,
Um,
exactly. So
right. So
315, we'll sell that contract for 330, and then the to a
okay.
cash buyer, somebody in our list or private network. So we
Right.
build
Right.
these buyer lists. We'll assign the contract, and then we get paid through title at the close of escrow.
Right. Now we have that
Yeah.
situation. You said cash buyer, obviously, and very deliberately. I personally, I mean, from a cash perspective, I maybe have the wrong friends, but I don't know any of my friends that run around with 330,000 in pocket or
No,
in their
so
bank
so we
account.
call
So,
them. I mean, it's really a figure of speech. We call them cash buyers because they're closing quick, right? But a lot of them use hard money lending. They use private money, so they'll come in and like for on the cash buyer side. And I'm a cash buyer myself, so some of these properties, the cool thing about wholesaling is that you're on the front row, you're on the front seat of all
right.
the
Yeah,
opportunities that
yeah,
we
yeah.
come across. So like there's properties that I like, and okay, I'm gonna take that one and I'm gonna flip that one myself, and then so I'll be the cash buyer for it, but I'll
So
leverage
then
it. I
you
mean,
do the renovation. Yeah.
yeah, I'll go to a hard money lender, still close within 7 to 10 days, and then pay off the seller. Now we have the wholesale fee and then the rehab fee on top of that. But if you're just doing wholesale, you're still gonna have a good healthy fee in there for the most part.
Yeah,
So
that's very good. And so now, just for people to understand, and you tell me if I'm wrong at any point on that, is if we go back to our example, you sold it for 330 to somebody who is cash in the sense of closing, but
yeah,
might get the 330 or let's say maybe 250 of the 330 from
yeah,
somebody. And then either with your help or with other help, they put the 50, 60,000 in to get it renovated, and then they
yeah,
would go and get it appraised officially and go to a regular lender and say, okay, the official appraisal now says, okay, it's 400 or 410 or whatever. And
yeah,
then they basically get the loan on that and they can pay their hard money person the money back that they got. They can pay
yeah,
back whatever they used to the renovation. They have their down payment in it, and their down payment is pretty much based on what they paid for when they paid for it to
yeah,
you or to the wholesaler rather than the regular amount, unless the bank says, okay, we need some extra to get to like minimum 10% or whatever.
yeah.
Depends on
So
what kind of
usually,
if you owner
yeah,
occupy, that's always the thing that I, as an investor myself, and you might be thinking similarly, I find it a little bit unfair, even though I understand it, but it's a little bit unfair that first time home buyer can get loans for like 3 or 5%. And even if they not the perfect credit, they get it for 10% down. And then I always have to
yeah,
put 20 or 25.
oh,
And then
oh yeah,
depending on what the value of the deal is, that makes a huge difference, right? Because if
yeah,
you're owner occupying it with, let's say, 10% down and you did this deal like we just talked through, then you
yeah,
don't really have to put any more money, but you actually end up with some equity, even though it's not a huge amount. but you got a 400 plus $1,000 house freshly renovated for much less than that, basically.
Yeah, no, and that's exactly how it happens. So there's a couple of different strategies that you can implement, right? When once you have first you got to have the deal. You got to find a deal. But when you find a deal, you can, hold that if you want to. You can flip it if you want to. And you can do creative financing. There's a lot of stuff that we do creative financing or seller financing on those. And we'll go to the seller, when we source them through the wholesale marketing, we'll go to the seller. Hey, listen, I mean, you're asking, what you're asking for, we can't pay that cash, but what does it look like when we talk about terms meaning if they sell or finance the property. A lot of these people own the property free and clear. If they own the property free and clear, we can put a loan in place and then pay them off, do a balloon payment in 5 years or something like that. Now literally we've gotten properties like that for free with no down payment, and that sort of thing when there's creative financing in place. And then what happens, you come in, renovate the property, put it up to par. If it's a multifamily or duplex or something like that, you do value add, rent it, monetize it, and then you refi out of it and then kind of cash them out, right? Now you have a property with equity and you have a cash flowing asset if you're doing a buy and hold strategy, for example, like you do. And but at the end of the day, like it's in the sourcing of the deal, right? So that's
Right. Yeah.
what's so
Exactly.
great
Exactly.
about wholesaling, yeah. Because you have,
Yeah.
once you're in there,
Absolutely.
the easy strategy is to take that contract and assign it, and then you get cashed out and get paid within about 10 days through the cash buyer. You get an assignment fee, and boom, you move on to the next deal, right? So it's a really good
Yeah.
way to monetize and kind of build up the bank.
I can see this. And I mean, if we want to put this a little bit in perspective to what we actually do with Idea Wealth Grower, it could really be, if people work with you, it could really be kind of like the first stepping stones, because
Oh yeah.
Idea Wealth Grower, the one core part of our strategy is to be able, because of the systems, and I was actually tempted earlier when you were describing how you got started, it's systems and processes, basically,
Oh
right?
yeah.
And yes, compliance is a part of it too, but systems and processes, basically, that we apply allow for our investors and myself, I mean, I'm always the guinea pig going first and trying things out, to invest in locations where the prices have not escalated to a level that they ran away from rent, right? Because if you really
Yeah.
want to do it as an investment, the problem is a $400,000 property, you might have a hard time getting like $3,700 or $4,000 in rent, right?
Right.
And that's not just in Phoenix, that's in a lot of places. I mean, I
Yeah.
live in the
If
San
you're
Diego
going
area.
off of the 10% rule, yeah.
Yeah,
So
yeah,
no.
exactly. Well, and I mean, the thing that's one of those issues. So, but when you do the investing we do, then we're looking at properties that are more between 150 and 200, and then
Yeah.
your down payment is basically between 30 and 40,000. And if
Yeah.
somebody were to do like 3 or 4 wholesale deals, it's not that they would then just stop or have to stop. But
Yeah.
every time they have done 3 or 4, especially if they have a job, right, and they do this
Right.
on the side, with 3 or 4 deals, 4 probably, you have enough to buy your first investment property, and you can keep doing this. And I don't know, I mean,
Yeah.
maybe you can say a little bit for somebody. I'm not necessarily somebody who just starts without any knowledge, but if somebody has followed your guidance and your coaching and has gotten a little bit in the groove of understanding how to create the leads, find the properties, what would you say, like if somebody really sticks with it, how many properties could they realistically do like as a side gig per year?
Oh man, I one of the things that I push for all of my students is to dedicate a couple of hours to it. I mean, if you're
Right.
side gigging it, right? If you're side gigging it, you have a
Yeah.
let's say that you have a 9 to 5 and whatnot, you can still prospect, pursue, and work on your business for at least 2 hours a day, and
Yeah. Yeah.
then
Yeah.
just consistently build that
Right.
up. And I have student after student, tons of testimonials and all that stuff of people that have gotten, their first deal within 60 days, closed within the first 90 days. And then from that point forward, I mean, you take a portion of that, a big portion of that, and put it back into the marketing, and then build the next one, and kind of
Right.
start feeding that engine. And I
Yeah.
mean, it's really,
Sorry for interrupting you, Rafael, but
yeah.
from a volume perspective, let's say somebody says, okay, I'm going to do this for a while. And so now they have spent 9 to 12 months to really get, the engine going. Let's say in year 2, what can somebody who is
Well,
not like getting completely crazy realistically accomplish?
we do anywhere on average, anywhere from 8 to 12 deals a month. So, and that's by design. If we ramp up the marketing and I plug more people into the seats, we can scale that. But because they do have that system in place, that process in place, we can kind of plug and play the staff, the team, right? But yeah, for us, the way that we have it set up, we do around 8 to 12 deals a month, and that to me, it's a good metered pace. It's consistency. It's going boom, boom, boom. Everybody's getting paid. We're not killing ourselves when it comes to marketing expenses and budgets. Yeah, so it's a good, healthy model. You take that, 8 to 12 opportunities to do something, you're going to end up flipping stuff yourself. You're going to end up buying and holding stuff yourself. So
Right,
that's going
right.
to feed the rest of the portfolio and the rest of the strategy. Yeah.
Yeah, very cool. So I think this is great for our audience to learn. There's not just you making money from your job and you saving it until you have enough for a down payment. Wholesaling
Yeah.
is definitely an alternative approach to this. One quick question before we come to the end I wanted to ask you is, we hear, and we mentioned this before we even started the recording, right now in the media, it's pretty much doesn't really matter what kind of area of investing. Stock market every day gets trashed for being in the dumpster. Crypto gets crashed for being in the dumpster. Gold and silver hasn't really done anything. Commodity prices in some areas are crazy and driving up. Like, I actually, for the first time in my life, I drove a nice BMW for 3 years and I got exactly or almost on the dot the same money back 3 years later than what I paid for it. It's like crazy.
Yeah.
And I hear, as a real estate investor, I'm not necessarily affected by the noise, but somebody in our audience who says, okay, I really like what I hear about real estate and I'm listening to this podcast and the different episodes and the different guests to see which area I want to get into. So I'm interested in your perspective. What should people make about all this doom and gloom that the media is spreading right now?
I think that the name of the game is really pivoting. We have to adjust. We have to adapt to what's going on, right? In 2008, that kind of hit us by surprise. If you go back to June of this year, that hit us by surprise when the interest rates just skyrocketed throughout the country, and people started dequalifying from loans. All right, so as investors, what do? We have to foresee, we have to think forward a little bit. Okay, what is this thing going to look like in 6 months, right? At the rate that we're going, for example, there was a period there where we were looking at inflation and that increasing, and then property values decreasing at a rate of 2.7% per month, right? And this is throughout the country. I have students all over the place, so we're looking and comparing data. So 2.7, right? So what did we do? We had to pivot and adjust our offer price. So we would look at a property, figure out what the value of the property was, shave off 10% because of that 2.7 depreciation, because it's usually the time that it's going to take somebody to flip the property and you put it in the market and sell it. So we just kind of buffer for that 10%. And if a property was worth $400,000, we deem it to be worth $360,000, so 10% less. And then we will do our math from there. But it's really about pivoting and then adjusting as the thing goes. What happens, I think, and the reason a lot of people crash and burn is because they're not tapped into, what's actually going on. At this point in time, they're still doing business with 2020 strategies or 2021 strategies, and things. We're living dog years in real estate, right? Like everything's just moving so quick. We are. It's crazy. So you have to be tapped into it. If you're not running comps, on a regular basis, if you're not making offers on a regular basis, if you're not talking to people who are actually in the industry and really just educating yourself every single day in what we do, like it's going to be tough to pivot, right? But that's why
Yeah, absolutely.
being part of or listening to podcasts like this, being part of coaching programs where you have people that connect, that's also a very, very good strategy. So as far as the doom and gloom, I think it's just another transition. We have to ride the wave. There's going to be a lot of thinning of the herd, I feel like, when it comes to investors, to wholesalers, competition, and that sort of thing in our space. There's a lot of real estate agents, traditional real estate agents. I also own a brokerage, and we see that from other brokerages. Just agents are not doing business anymore. They're going back to their 9 to 5s and that sort of thing, just because things are getting a
Yeah,
little tight.
absolutely. Yeah. No, I
Yeah,
hear
so
you on that, and I
you have to
totally
adapt.
agree with that. In our own business, when it comes to the mentoring and coaching, we have actually pivoted, like you said, and I think that's a very, very good term in general for this situation, from buying properties that are what I call existing renovated properties to looking for investments in build to rent
Yeah,
properties, basically new build properties in locations and where that ratio between the price for the new property and the rent that you can get is actually still good. And then you're not getting eaten alive by the higher interest rates. And
Yeah.
obviously, on the one hand, you said dog years, and I agree with this when it comes to the actual activities within the business. But when you then look at the property that, for example, one that you say, I keep this one and basically turn it into a long term rental, which is what we do as our fundamental business, then you immediately at that point adopt a longer term perspective, which means, okay, yeah, we have crazy interest rates, but we have this beautiful situation that, let's say, in 5 years from now, interest rates are back down to 3%. You just refi now,
Yeah.
but you have
If I
the
had of
asset and the tenants have already paid down the asset. So I very much resonate with what you said. We need to be flexible. We need to be willing to pivot. We need to look out. But there's also the counterbalance to that is one thing that I believe has to be considered. Number one, in my experience, those markets that have gone up the most crazy, the most rapidly in the last, let's say, 5 years, are typically also the ones that fall rather quickly.
Oh
When,
yeah.
on the other hand, you invest in markets that have not taken part in the same extent in the craziness, like we have, for
Yeah.
example, some markets in Ohio.
Yeah.
Yeah, they have increased in value, but nothing as crazy as like San Francisco, San Jose, Phoenix, or Vegas, or
Yeah.
stuff like that, or on the East Coast. Now, that also means when the market starts getting a little more fragile, they're not going down 2.5% per month. They might be going down 3% per year, right?
Yeah.
So that's something to consider, but still, the big underlying thing on all of this, in my opinion, is that we just don't have enough inventory. And whatever inflation and financing and interest rates and all of that does, there's way more people who want a house than their
Yeah.
houses, right? And so, as
Yeah.
long as that's the case, and I don't want to say it's going to be like that forever, but at least for the foreseeable future, this whole like the market is going to crash. It can't crash when the demand is so much higher than the supply.
Yeah. There's still
So,
demand out there.
anyways, that's
So
my
yeah.
opinion. Yeah. Last question I ask
Okay.
everyone, and you saw that in the little write up, completely unrelated to real estate. Rafael, if you had a time machine and you could go forward, backward, anywhere you wanted to, you know what you know, you're not allowed to change the time space continuum, where would you go and why?
And I know what I know.
You know what
Uh,
you know. You just can't, you can't go and say, okay, I know the winning lottery numbers, and stuff like
yeah.
that.
Yeah. And honestly, I think I'd go back to like the Leonardo da Vinci timeline and setting. I tend to be a very, very curious person, and I think that I mean the Renaissance was one of the periods of just innovation and a lot of game changing when it came to a global impact. So I don't.
Yeah,
I've always been
absolutely.
fascinated by that. I mean, it wouldn't be about the money. It's never been about the money for me. So I mean, I could go back to the early 2007, right? if I wanted
Yeah,
to
yeah, yeah, yeah.
kill it
Yeah.
kill it in real estate. But I think I don't know. To me, that's intriguing. I think that's when you have the ability to take your curiosity to a next level. It's I mean
Right.
it's a time to be in.
Yeah. So, I mean, that obviously begs the question, would you talk to the Pope and tell him that Leonardo is correct?
Yeah. Oh yeah, a big Leonardo da Vinci fan here. So
Yeah, yeah. No, me too. I always, because I mean, I told you that we're doing this with me being in Spain today, and
yeah,
I oftentimes am really fascinated to see who has influence on really big things in the world. Right? And it blows
yeah,
me away to what extent, especially in, the early powers like, the Romans and the Greeks and the Egyptians and stuff,
amazing.
how much religion actually played an impact. And I mean, the only reason that Leonardo da Vinci wasn't like a rock star as some of the people are today is because the church just insisted that he must be wrong, and we need to make sure that he admits that he's wrong and
Yeah.
stuff. So, but amazing things happened at the time. So I would probably piggyback and just to see what's going on, whether we get to talk to the Pope or
To
not,
see
right?
what's going on. Yeah, it's just
Yeah.
the level of forward thinking that that was happening in a lot of places back there was just incredible. Let me show you something real quick. And I got this off of. I have this beautiful thing sitting in my office.
Oh, cool, cool. Yeah.
But it's got like all the works from from Da Vinci. It's I actually got it. It was sitting on a property that I found as a wholesale deal. Ended up buying the house, and that was part of the contents that was left behind. I was like, how can somebody leave this behind? It's crazy. So
Yeah,
yeah,
it's just, people are fascinated by different things. It might have been a gift to somebody who wasn't really
yeah.
into it, but I'm glad that you found it, and it's definitely a very amazing topic. So, Rafael,
Yeah.
as we come to the end here, I want you to let the audience know a little bit about the goodies that you have and how they can get in touch with you.
If somebody wants to get a hold of me, I'm pretty active on social media, Instagram, and you can find me as Rafael Cortez CEO. It's my handle. Also, I do have a free course that you can get access to if you go to reiwholesaling.com. It's a free course. It's a full breakdown of the 6 stages of wholesaling, the 6 stages you need to understand as far as the process and the systematic approach to it. And it's a simplified breakdown of exactly what wholesaling is and you know how to do it. So it's a really good, solid course on there, and it's free access to it.
Yeah, we're going to put those links and everything into the show notes and the clips and so forth, so that people can find it and can try it. So, Rafael, thank you so much for being on the show today and sharing your wisdom. And we all need to remember, you got to be able to pivot if you want to be successful.
100%. Thank you so much for having me, man.
Absolutely. Have a good night. Thanks for listening, and I hope you enjoyed today's episode of the Ideal Investor Show. More info and the links we mentioned during the show are in the show notes, or you can go to our website at idealwealthgrower.com and sign up for the Apple Podcast link. And if you like to talk to me, sign up for a strategy call. Hopefully you want to share what you learned with your network and bring more people in. We are really eager to hear your comments. And until next time, be well, stay safe, and ciao.